Good morning. It's now 9:12 and we've got Lee Tian Xiang, Senior Research Analyst at Fund Supermart Malaysia on the line for a look at the property sector.
Good morning, Teng San. Are there various cooling measures right now currently implemented in the sector, and how do you think the developers are coping with such an environment?
Yes, the government has actually implemented various cooling measures to curb the property prices. So some examples are the developer interest-bearing scheme, which has already been removed, as well as the increase of the real property gain tax. So this actually helps to curb the property prices. So I think they have actually been quite responsive in coping the challenging environment. So they have actually been engaging in more aggressive promotional activities, as well as giving out a lot of discounts, rebates, as well as waivers for property buyers out there.
Do you think property loan approval rates are being affected, and why do you think this is so?
Yeah, loan approval rate for property loans, they have actually been on a declining trend. In fact, for the first quarter of 2016, we have seen that the loan approval rate actually stood at 40.1%. So this is actually relatively lower as compared to the 52.4% that we have seen in the same quarter last year. So I think there are two main reasons. So one of it will be on the banking side. So they have tightening liquidity condition as well as stringent lending standards on their side. And the other point is the declining repayment capability of borrowers. So some of the borrowers, they might already have debts to service, or their debt servicing ratio may already been too high. So this has actually prompted the banks to actually reject their loan applications.
Do you think this will affect the consumer business in general, particularly in the loan lending business of banks?
Yeah, I think this might be one of the factors also, aside from the weak sentiment as well. So all these stringent lending standards as well as they are reducing repayment capacity will definitely be some impact on the consumer and banking side.
So, because of this pressure, we're also seeing some various easy payment schemes being offered by developers, maybe to boost their sales. Do you think these schemes are attractive? How do you think this will affect their cash flows?
Yeah, if you're looking at the marketing tactics that the major developers are using right now, they actually usually defer payment program or their guaranteed loan option for home buyers. So if we are looking at buyers' perspective, then yes, definitely all these schemes are attractive, and this actually makes it relatively easier for them to own a property. But for developer sides, this might help to boost their sales figure, but their operating cash flow are likely to be affected. So by engaging in all these easy payment schemes, they are actually deferring their cash flow that they are going to receive from their unbilled sales.
So this unbilled sales at Tencent, do you think earnings are being boosted so far? And what do you think would be the major developers' first quarter earnings thus far?
I think right now not all developers have already reported their quarterly earnings, but for those who have already reported, the result was a bit mixed. So with regards to the challenging environment at this juncture, right, it was not a surprise for some of the developers to deliver subpar earnings result. But some do outperform over the quarter, so I think this is mainly due to their unique propositions, such as the location of their property holding, as well as the concept that they are selling to buyers, such as the township concept.
So this township concept would mean more urbanization. Do you think this will create some sort of spur for other developers to jump in and actually improve on the situation?
Yeah, definitely. If there's some unique proposition that might attract buyers, then definitely they'll consider it. But it also depends on their land bank, which locations they are actually having their land available for buildings, all these properties.
Following which, I think the government is also playing a major part in introducing more grant and introducing more liquidity in the market. Things like My Deposit Scheme for first-time buyers have been rolled out. Do you think this will be a boon for the property market?
This scheme appears to be a supportive measures to the property developers. So if you're looking at the sub-segment, so if you're comparing to those operating in the higher end segment, right, so those affordable housing developers will definitely benefit more from this initiative. So since one of the criteria for the scheme is that the house price must be 500K or below. Well, at least that's the case on the first side. But we do note that there are three major hurdles that might limit the effectiveness of this scheme in boosting the property company's sales. So one of it is the consumer sentiment. They are still weak, and household affordability has been declining. So people might hesitate to commit on big-ticket purchases. The second thing is that I mentioned earlier, the tightening liquidity conditions in the banking side. So this implies that only those home buyers with good credit profile will be able to secure a mortgage loan. And last but not least, this scheme is also applicable to sub-sales unit. So people can actually buy their home from the secondary market instead of just buying through the property developers.
So we could expect the secondary market to be further spurred following these kind of scheme. What is your expectation in terms of the secondary market uptake going forward for this year?
Well, definitely, if you are looking at secondary market, with the help of the scheme, then definitely people will be looking out for relatively more in terms of all those affordable housing segment. So I think moving forward, affordable housing segment will be relatively more transaction as well as more frequent in terms of their transaction as compared to those in the higher end.
So in general, do you think this scheme will also be beneficial to some of the affordable housing developers?
Yeah, I think this will be beneficiary to all those affordable housing developers out there. But bear in mind that just now I've also mentioned that this scheme is applicable to sub-sales unit. So for all those first-time home buyer, they are not necessary to buy first-hand from the primary market. So they can also buy a sub-sales unit,
So
which is
Tian
directly
Sang,
from the
what's your
homeowners.
outlook for the property sector, and what do you think is the earnings visibility for these developers?
Well, although the prospect for property sectors remain challenging this year, I think that these companies should continue to see some decent earning visibility in 2016. Because if you look at the unbilled sales for these companies, right, on aggregate, they are actually standing at 1.4 times of their actual sales. As such, we think that these lock-in sales should allow these companies to cushion the declining sales growth going forward. And as for the outlook, as of now, we are staying neutral on this sector because we don't see any significant positive catalyst that will drive this sector going forward. So market also seems to price in some of the headwinds that I mentioned earlier. This is reflected by their bearish assumptions in terms of their sales growth, earnings, as well as their profit margins. But nevertheless, I think with analysts' current bearish projections, we are expecting a limited downside risk for their earnings going forward. And if you look at their valuation metrics, right, all these property sectors, property companies, they are actually trading at a PB ratio of 0.7 times. So this actually indicates that they are quite cheap and attractive, and investor might consider to have some exposure in it.
I've been speaking to Lee Tian Siang, Senior Research Analyst at Fund Supermart Malaysia. And now Melissa Idris is standing by to speak to Ben Libran, Analyst at Options Express. He's on the line with us all the way from Sydney, Australia.